Hey everybody, welcome back to Living in Charlotte. I'm Jason Rapoli, and along with my wife Kristen, we are Rapoli Real Estate. We are helping people just like you buy, sell, invest, and relocate in the greater Charlotte area. And I wanted to welcome you back to another episode of Myth Busting Mondays. In today's episode, we're going to be going over, do you really need 20% down in order to buy a house? Spoiler alert, you really don't need 20% down. I think that this myth has stopped so many people from even trying to buy a house or saving up so much money that they don't really need to have in order to buy a house nowadays. And in the long run, it could be costing you more money because every year those house prices just keep going up and up. So we're going to bust that myth wide open while showing you real examples, real numbers, and loan options that could help you and your family buy your first house or your next house. So stay tuned, it's coming up right now. So before we get started, I wanted to give you a little history lesson and show you where exactly this came from and when. Banks wanted that cushion of equity in their pockets so they were protected in case of a big market shift. But luckily, things have changed and there are many options out there now for people who don't have 20% down to put on a house. Of course, it would be great if everyone had $400,000 or $500,000 to buy a house and you don't have a house payment, but luckily, there are many options for you and your family. Let's go ahead and compare some of these side by side so you're more well informed. So when you're looking for that first loan or your next home, you know exactly what you're doing. However, before we continue any further, I want to draw your attention to the screen here. It has all of our contact information there. You can call, text, email, or better yet, set up a Zoom call with us and we can get started on your home search whenever you're ready to buy or sell your home. And could you do me one more favor? Could you like this video, comment, and share it with friends or family if they're looking to buy or sell their home, so that way we can help them on their journey in the Charlotte area. So let's get started. So say you were trying to buy a $400,000 house with 20% down. With that old school format, you would have to have nearly $80,000 just to start the process. I don't know about you, but I don't know that many people with that much cash sitting around. So let's go ahead and go over the first of our loan options, which is the conventional loan option. So this graph here shows a conventional loan offer for a $400,000 home. Your minimum down payment will be 3%. So on a $400,000 home, that is $12,000. That is still quite a bit of money, but it is not the $80,000 that you would need to have for the 20% down. With this particular loan type, you will need a credit score of 620 or above. Now, different banks will have different standards, but that's just the baseline here. So you'd have to go talk to your bank, but you still have to have decent credit in order to get a conventional loan. So next on the line there, you can see PMI. And a lot of people aren't sure about what that is, so we're going to go over it briefly here. PMI just stands for Private Mortgage Insurance, which is a monthly fee required by lenders when a down payment is less than 20%. So if you only put down $12,000, you're going to need to make up that difference before that PMI is actually taken off of your loan, which you will get there eventually, but you have to get to that 20% threshold, and then that will be removed from your payment. If you have any questions on this, you can also reach out to us. We'd be glad to talk about it more, but that's basically what that PMI is doing there. So once again, this breaks down the key benefit, low down payment, and then you have to just make up with it with the PMI, but it's much easier than coming up with that extra cash on hand. And best for buyers with solid credit. Like I said, you do have to have good credit because banks will run that, and you'll have to have solid credit in order to get approved for that loan. And another nice little perk here is that you can refinance. So as rates continue to drop, you are able to refinance if you get a better rate for your home. Okay, and the next one that we're going to look at here is the FHA loan. So for the Federal Housing Administration, or the FHA loans, the minimum down payment would be 3.5%. So on a $400,000 home, that would be about $14,000. The credit score is a little bit lower on this one, so it's around 580 or above. Once again, banks run their own numbers, so you'd have to go to certain banks and see if you qualify. The PMI on this one, however, is for the duration of the loan unless refinanced. So you will be paying that extra insurance to get that home on this particular loan. However, one of the key benefits is it is easier to qualify for this. So if you don't have great credit, you can still get a home. You'll just have to pay a little bit extra in order to get there. Once again, this is better for buyers with lower credit. And extra perks, it's low upfront costs. So as we're going through here, I hope you're catching all this. We tried to break it down as simple as possible for y'all. If you have any questions, go ahead and reach out. All of our information is down below, and we're going to continue on with the next option. So this next option here isn't for everyone, but it's quite a big deal if you're an active service member or a retired one. So a Veteran Affairs, or better known as a VA loan, is only eligible for veterans and active duty service members. However, if you're in this boat, you do have some good options here. Minimum down payment is 0. Credit score varies, but typically it's around 620 or higher. PMI, you don't have any, so no down payment, no PMI, no loan limits. But like I said, this one is for active service members or veterans, but this is a good option if you are in that boat. All right, we're coming down the home stretch with our last one here, so let's jump into it. So the last option here we're going to look at is USDA, which stands for United States Department of Agriculture. This one does have some perks, but it has some restrictions as well. As you can see, minimum down payment is 0%. However, you do have to have a higher credit score. And one of the key factors here is that this isn't available in all areas. Like I said, some of the restrictions that they have on this is that this is not available in all major city limits. So you have to see if the loan would be possible with a particular house that you're looking for. Your total household income cannot exceed 115% of the median income for that area, so higher earners won't qualify for that. And this does need to be your primary residence. You cannot buy a second home with this particular loan option. This particular option does have a lot of restrictions, and you may want some more questions answered that you might have. If you have any, just go ahead and reach out. Our contact information is right down below, and we'd be glad to help you out with any questions you have about this particular loan option for you and your family. So we broke down all the loan options, and you can see on the screen there, I have them a side-by-side comparison for you. All right, and that's all I got in today's episode. I want to thank you again for watching this episode of Myth Busting Mondays, and I hope you understand that there are multiple loan options out there for you, and you don't necessarily need 20% down in order to buy a house. And once again, if you've enjoyed this video, like, comment, subscribe, share it with a friend or family member who might be interested in moving to the Charlotte area, or if they just want to learn more about Charlotte, North Carolina. Thank you for watching, and I'll see you in the next episode. Have a great one. Bye.